Alrighty, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. Let's start off by taking a look at Capital One. Capital One not really doing much here today at all. Went up a little, down a little. It's really just kind of been sitting here. It is trading above the 7-day moving average in the middle of a consolidation. My concern with Capital One is a gap up. On any of these stocks that are giving these bearish signals, I'm concerned about a gap higher. We could sit here and I could show you 15 bearish arguments for Capital One from a technical standpoint, throwing in a whole bunch of different indicators and metrics and drawings. But bottom line here is 70 is the key price. No matter how we look at this, we start to break 70. Capital One's probably coming up to 71 and a half, and so we'll break 70. We'll pop on out of there. But as long as we're trading below there, we'll continue to hold Capital One. In general, it just hasn't moved. There's not been much volume. It's not gone anywhere. And that's really a product of the broader market. I mean, here's stock futures. And we don't see this very often at all. But take a look at this range, 1766.50 and 1769. We're talking a 2-3 point range on futures, a half point range for an hour at a time. There's no volume. You look at the volumes down here below. There's no volume. There's no catalyst. There's no reason for anything to kind of go anywhere. We have seen individual names move a little bit. If you take something like Apple, okay, Apple was down $4 earlier this morning, has come all the way back, has turned positive, after being down about $5. I am keeping an eye on Apple. It has been consolidating. Could it break out to the upside? Absolutely. I'd love to play that. So while most of the market's been pretty flat, there are a few exceptions. One of them that we talked about this morning that Carl put on his top three here today, Tesoro breaking out here above 50. If we were starting the 100K challenge here today, I would definitely look to go after to go after Tesoro here. When we're looking at the rest of the sector, the refining group, Western Refining WNR has some nice potential from a longer term standpoint. Here on the weekly chart, okay, you'll notice it's kind of been consolidating. Good upside potential here in WNR. And one of the best things for these refiners is the fact that oil has come back down. The price of oil has fallen well over 10% here in the last 2 months. Okay, well over 10%. And even though the news on the refiners, earnings, Chevron, Exxon, everybody who's involved with refining has said, "Oh, it's terrible, it's bad, it stinks." Well, why? Because oil was up here at 105, 110. Now oil's come back quite a bit. Some of the crack spreads are improving, and even in the face of all that bad news, we're seeing serious buying going on in these refiners. And as long as oil continues to push lower, that'll be a positive for these refiners. Yeah, Max, what strike would I recommend? I haven't priced them out here. Generally, with Tesoro, I'd like to get one strike in the money. I don't mind going out of the money, but this is a little too far out of the money. We're talking $4 out of the money for the 55. That's a little bit too much. Um, Even these 50s, they're not really great value here. Huge option value or huge volume on the December 55s today. Huge volume there. I tell you what, if I was buying it right now, I'd probably just buy a little smaller position and go with something like the November 50s. Something like the November 50s. Even though they expire on Friday, Looking for that immediate breakout in regards to the trend rider signal that's there. In trend rider signals with Tesoro in the past, it's broken, hit the trend rider, and boom. I mean, it's 4 or 5 days straight up. In the past, the most recent trend rider bull signal, right back here in October, and the stock went from 48 and hit 51 at its high. So to see it move up there very quickly. That's kind of how, if I were to trade it right here, right now, that I'd go with. Or just coming into the December, probably something like the 49s is what I would use there. It really comes down to risk reward, how much risk you want to put on here. If I were doing this for the challenge right now, I'd probably do the December 49s. If we had strong gains in a challenge and I wanted to go after Tesoro, I'd probably come after these November 50 and a halves and go with those. Is kind of what I would look at. Okay. There's a lot of me just kind of hoping Tesoro chills out for a little bit, maybe pulls back, retests 50, right? 50 is the breakout level. If we get lucky, okay, we'll see some sort of pullback back here to 50 into options expiration this week, okay, into option expiration. So we'll kind of see how that plays out here. Let's take a look here. Market really flat. But if we look at some of the internals, are they doing anything? Let's take a look at the VIX. Yeah, is this doing anything? Well, it's going down 3%. Well, of course, market doesn't move, VIX is going to drop. Okay. Still, those of you who think, hey, the market's in for some strong correction, the market's in a little bit of trouble over the course of the next 4 to 5 weeks, one of the best trades on the board for that mentality, these December call options on the VIX. Some of these December 13s for $2 here, even the 15s for $1. If we get some sort of fear come into these markets, to see the VIX jump up into the 17, 18 range would not be out of the realm of possibility, and those would pay off very well. So you can kind of take a very small risk and get a lot of reward potential. Again, that's just for those that have a very bearish thesis on this market and over the next, for a November seasonal type correction. Okay, if you come out on these VIX calls, you take a look something even out to February. Okay, come in here to like February and look at like the February 10. Okay, they're 750, right? So what does that mean? That means that the VIX would have to go to 17 by February expiration. So you have 100 days. 17 is break even. Okay, for the market to go 100 days without pushing up to 17, be very rare. And with what's going to go on here in January with some of the government standoff, we'll have another Republican Democrat standoff here in regards to the Affordable Care Act and basically the budget. And so there are a lot of catalysts between now and February to send the VIX up. Those that think that, hey, there's going to be some sort of downside action, there's those couple ways to play it. Okay. Casino stocks. We exited out of MGM, and I was emailed and said, Jeff, are you now bullish on MGM? My response was, heck no. In fact, if this were to start to break back below 19, I'd love to get back in. I think there's some really good downside potential. You'll notice the volume today, just no volume here on MGM. Las Vegas Sands has moved a little bit more here today, back above 70. Okay, and then Wynn here has moved back above the 7. So all three of them trading back up above the 7 just means for the bears the risk is a little bit higher here. But I would love to look for another another entry on these, and I think we will get that. Given what's going on with the volume, I think we'll get that. It's just when, I don't see it right yet. Here we'll probably see some sort of bearish candle come in, for win here, 167, 168 area. Okay. Kind of what we're looking at there. Jay, looks like you popped into Tesoro. Good deal. Just remember, take a look at the range on Tesoro. For it to move $1.50 in the course of an hour, yeah, it'll do it. It'll move, and so it's a fun one to trade on the right side when it's working. But $1.50 moves are not necessarily significant on it, so it can be to hold it, it can be a little challenge if you're evaluating it from a minute by minute standpoint. A lot of fun if you're riding the major trend there. Okay. I was asked about Dang. I talked about Dang here earlier. Dang is a Chinese e-commerce stock, and it's pulled back 30% here since middle of October, getting a little bit of a rally here. Dang is a tough one to play. It's one who the options are actually a lot better than they used to be. The option spreads on Dang used to be incredibly high, but they're not really that bad anymore. And even the IV on it, if you go out to December, isn't too bad on these December 8ths or even these December 7ths. Okay. But if I were to play Dang to the upside, I would simply put what I'm willing to lose and kind of have an all or nothing type of a trade on that. Let's take a look at the regional banks. We talked about the regional banks this morning and how, yes, very bullish signals on Friday. Maybe a little over exuberant in the very short term. Let them pull back just a little. They're pulling back a little today, right? Nothing bearish, okay? Nothing bearish to this point. You could call it a dark cloud candle or whatever, but I wouldn't make any sort of assumption on the candle given the complete lack of volume today. But if we start coming back into the hourly chart, we're starting to see a little support come in here, 38.25. We start to see KRE pull back into the 38 area tomorrow, something like that. It could give a very nice entry point. Those of you who are long KRE, today is nothing to be concerned about as far as, oh, is it a negative thing? And even when you look at some of the major components, KeyBank, Zion, okay, they're not major. Could they be tops? Could they be falling from here? Sure, I'm not going to put anything by this market, but in general, no volume, no real. Really just a profit taking, very light profit taking after Friday's move in some of these regional banks. In fact, things like Goldman Sachs here have had a little bit of follow through to the upside. Bank of America, here's Goldman Sachs. Goldman Sachs has just been riddled with, bearish potential on this little flag to the upside. A lot of times, this type of flag gets resolved to the downside. We've seen potential come in. We've seen signs that it wants to do it. It's been underperforming the rest of the financials, but even some of the best breakdown signs haven't had follow through just yet. Just yet. Goldman Sachs is one on my list that I would love to be to short into the next challenge if we got an opportunity. Speaking of Goldman Sachs, I want to bring up an article that I sent out earlier today on Goldman Sachs, or not on Goldman Sachs per se, but some of the stuff they commented on. Let's see if I can bring this up here for us. There we go. Then I'm just going to put this in the chat for those of you interested. There we go. So why the big run in the small cap stocks in Russell 2000 is ending Goldman Sachs? When Goldman Sachs puts out a piece like this, I pay attention. Okay. Not that Goldman Sachs is always right. In fact, there are hundreds of occasions where we can go back and say, well, Goldman was wrong. Okay, Goldman was incorrect and different things like that. Uh, but at the same time, Goldman Sachs drives the bus. All right, when Goldman Sachs speaks, people listen. Okay, there are a lot of opinions around Goldman Sachs or whatever, but whenever they have something like this, I pay attention. Okay, small caps, the darling of the past 12 months, may be about to get dumped. Average lever funds have shorted the Russell 2000 portfolio. Uh, and basically talks about why the index is up so much. Okay, valuations are really high. Play small caps are a play on domestic growth. Now things are turning to China and the eurozone, and they give some reasons here. Okay, as we've gone through this last challenge, you've noticed me. I have this. When I see a bearish signal on the small caps, I've been kind of going after it. And I'll continue to do that as we go forward, simply because market corrections, I will expect the small caps to pull back the hardest. While that is said, I know many of you have been out there buying some of these small cap names, the individual names, and a lot of them have really strong upward trends and they continue. And so until individual stocks get broken across the board, we're probably not going to see anything major, but we are starting to see some signs that small caps are starting to weaken. We're seeing some signs out of Goldman. These are just some danger signs. And again, we've been hit with danger signs all over this market all year. And every time the market basically says, who cares, and buys them up and takes it higher. So it is what it is. But as we go forward, this is something that is kind of with what I am expecting to see as the next challenge rolls along. All righty. Well, we appreciate you hopping on. We will kick off here with the Options Education Week after the bell here, about 15 minutes after the bell, with our introduction to options. For those of you who want to stay on board, we'd love to have you. Also, the class will be recorded for playback whenever you would like. To access the class, you just have to be in the live trade set. You don't have to do anything extra. You just have to be logged in for that. Okay. All right. We appreciate you hopping on, and we'll talk to you soon. Take care.